Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's December 21st, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. You'll also be given a heads up as to which stocks are giving you overbought and oversold cluster signals at the bottom of those emails. In addition to that, we're heavy users of Twitter or X, and my handle is @BrandonVanZ. Would encourage you to follow me if you're not doing so already, and we really appreciate those of you that click like and repost on this Market Outlook related content. Last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into our daily recap here. And it was quite the pleasant day in the market. As you can see, I've got the S&P 500 heat map pulled up, and it was a green day, to say the least. You can see across the board, nearly every single sector and industry is shining here today. But of course, a little context is important, and we'll have to remind ourselves that yesterday was equally as bad to the downside. So much of this is just getting back part of what the market lost yesterday, as we finally ended the, I think it was 37 trading day streak of the S&P 500 without a 1% pullback. So yesterday that ended, and then today we were basically up 1%. So didn't get back all of yesterday's losses, but the majority of them, and made maybe investors feel a little bit more comfortable after having a bit of selling kind of out of the blue yesterday, and much of yesterday's selling happening in just an hour or two in the afternoon. So felt a little bit strange, I guess, because we've been trained here for a month and a half at this point that markets have one direction, and that is up. So when something comes out of the blue like yesterday and a big sell-off occurs, it feels a little bit different. But I guess we're back on track here one day later. So let's go through our information, see what we can glean. You can see here that from a Magnificent 7 perspective, Tesla was the star today. It was up about 3%. We also had a very strong day out of Amazon, up over 1%. Meta and Alphabet both up over 1% as well. Nvidia was up nearly 2%. Microsoft was up almost 1%, and Apple was the only Magnificent 7 company that closed the day lower. But, let's cut them some slack there. They were only down 0.08%, so basically an afterthought. In terms of other areas within the market that excelled today, it's kind of hard to pick and choose because there were so many outstanding performers. But there's a lot of those brighter green squares kind of in this technology-oriented area. AMD was up 3%. Intel was up almost 3%. Salesforce, of course, a Dow Jones component there, was up nearly 3%. Accenture was up nearly 3%. So that seemed to be an area that was clicking pretty nicely. Seems like travel was doing pretty well. Those cruise ships have had quite the year. Again, Carnival up 6% today. Expedia up 4%. Royal Caribbean up 5%. Some big moves there. And that has continued some big moves all year long in that space. Other kind of travel-related names like Marriott was up 2% today. Las Vegas Sands was up 2.5%. So there seemed to be some enthusiasm around discretionary spending. Now, just to the left of my cursor, you see Nike here. Not that the 0.91% move today was particularly noteworthy, but did want to point out that Nike did report earnings after hours here tonight, and similar to what we saw out of FedEx on Tuesday when I was last with you, they are really spilling over. Nike, the last I checked, was down somewhere between 9 and 10%, which is, of course, a big move for a company of its stature. So there may be a little bit of pressure on some of those discretionary stocks first thing tomorrow morning if market participants get a little bit too nervous about what they are hearing out of Nike in the conference call this afternoon. Other areas that excelled today, I would say that some of the healthcare names stood out to me. Pfizer had a nice day, up 2.5%. Intuitive Surgical up 2.5%. Stryker up 2.5%. So some good movers there. Dexcom was up 5%. So that was one of your best performers on the market today. Speaking of which, some of you saw my tweet earlier today about a dividend aristocrat that we don't talk a lot about because it's not as much of a household name, but my goodness, what an extraordinary story it has been. And that is, let me see if I can find it here, right here, Cintas. Some of you may know them as the uniforms company. Of course, they supply a lot more than uniforms these days, but we're talking about a $600 stock here all of a sudden. That was up another 6.5% to all-time highs today. And for those of you that saw my tweet on it, I mean, it's up, tens of thousands of percent over the decades. And in particular, the last decade, I think it's up like 1,000% in 10 years, something like that. It's just phenomenal. So while its dividend yield is no longer quite as attractive after seeing its stock price go up as much, they do raise their dividend each year. And not only that, but of course, having a nice total return resume there with its stock price doing as well over the years. So congratulations to all the Cintas shareholders out there. That was one of the best stocks in the market today and continues an incredibly impressive run for ticker symbol CTAS. In terms of any of the downside movers today, there really wasn't a lot. Some of the payroll companies were down. So Paychex was down 7%. That was the worst performer in the market here today. And then that kind of bled over to ADP, another dividend aristocrat in that case, down 1.4% there. So I didn't really see what the news was on that. I'm assuming that it was probably earnings related, but you'd have to go and double check that just to make sure. But that's not a normal move there for Paychex, being down 7% out of the blue on a robust bullish move like the market saw here today. We did see a little bit more bearishness kind of creeping into the utilities as well. They still fared reasonably well, in terms of total performance across the board, but you had a few more red patches within utilities than you see within some of these other sectors out there. So like NextEra Energy, as just one example, was down 0.4%. Southern Company down about that same amount there as well. Dominion was down about 1% here. So not a big deal, but did stand out to the eye just a little bit since the rest of the market was extraordinarily bullish. Now, again, this is going to be one of those shorter videos of 15 minutes, so I don't want to belabor the point too much, but because I'm not going to be teaching classes next week, as I'll be off between Christmas and New Year's, this will be the last time you hear from me in 2023. So I thought it might also be interesting just to take a quick peek here at the year-to-date performance of the S&P 500. So the view changes now, and this will show you what the returns have been through December 21st. Obviously, there's still another week left, so this will change by the end of the year, but this will give you a genuine sense of where the strength was in the market this year and where the weakness was. I'm sad to say that the weaker areas happen to be a lot of the dividend-oriented areas that I tend to have a bit more of an interest in personally. A lot of those consumer staples, as an example, had a tough year. Procter and Coca-Cola, Pepsi, Philip Morris, Estee Lauder, Kenvue, and Kimberly-Clark. Many of those companies were down. Remember, a lot of the packaged foods and beverage companies were really impacted this year by all the talk around the weight loss drugs and some of the impact that they might have. Notice that Eli Lilly, of course, one of the key companies developing the weight loss drug, was up 56% this year. So that was one of your themes of the year, is the weight loss and its impact on the various industries and sectors out there. Of course, another big theme of the year was AI. I would say that the star of the year was NVIDIA. And I'm very happy to report that my top-down trend trading class bought that in February, and within 4 months we had doubled our money and anointed it as a coffee can stock, where we sold half of our shares and played with the house's money on the rest. So that one we were very fortunate to get into. We were also very fortunate to have ownership stakes in that same class portfolio in Alphabet and Microsoft, both also benefiting from the AI move here this year, and both of them up between 50 and 60%. So amazing days there. We also have owned Apple the entire year in that class. That one was not up as much and is not quite as much of an AI name, but nonetheless obviously participated nicely in the market this year. A wonderful 50% move for the world's largest publicly traded company there. Amazon had a nice year, up 83%. Tesla up 106%. So again, take a look at the Magnificent Seven. Now you know why they're called the Magnificent Seven. A double out of Tesla today, or not today, but this year. 83% out of Amazon. Nearly a triple out of Meta, and we owned Meta in that exact same class portfolio for much of this year. We actually recently disposed of it, but we caught a nice chunk of that 200% move out of Meta this year as well. And then I mentioned the others, but those are some really impressive moves. And, they weren't alone. A stock like Broadcom, which we've had plenty of exposure to in my dividend growth investing classes over the years, was up 100% this year and is now it's a $500 billion company. They were showing the market caps on CNBC earlier today, and I noticed that Broadcom is bigger than Visa right now because of such a massive move that it had. Notice Visa was only up 25% this year, but Broadcom was up 100%, and so it kind of jumped ahead of it in the market cap race there. You also saw that AMD had a fantastic year, up 116%. So those are some of your bigger winners and most important winners out there that really impacted the market on the upside. As I mentioned, the consumer staples sat out the year. A lot of the healthcare companies that weren't Eli Lilly struggled. Pfizer really stands out there. So does Bristol Myers. Even Johnson & Johnson had a tough year, down 12%, as this year was noteworthy for them having spun off Kenvue along the way. Energy, believe it or not, had a tougher year after last year being a strong year. They gave back much of those gains from the Russia-Ukraine boost in oil prices. This year gave back, in the case of Exxon and Chevron, about 7 to 16% there. And then the utilities really struggled here this year as well. That's more of an interest rate sensitive story, with interest rates going higher. Of course, that's going to have tremendous pressure on something like the utilities there. But, where sell-offs occur, opportunities emerge. And, for my money, I think Johnson & Johnson is a good example of a company that is attractively priced today after it's been down 12% this year. Another one I would throw into that conversation is Hershey's. Hershey's is down 22% this year. If you were to take a look at our chart, hang on just a second here. So first of all, be aware that today the breadth numbers, 460 stocks in the S&P 500 closed higher. So a 92%, to the bulls here today. That's one of the more impressive breadth numbers that you'll see. And then wanted to show you real quick on the dividend stair-step chart. I know this is a shorter presentation here, so I don't have a trade application example for you. Remember, if you want me to get back into that mode, I ask you to click like on Twitter. As long as we're up and over 100 likes, more than happy to do that. But for the last month, we haven't been able to get there for whatever reason. So I'll let you guys decide if that's something that is a thing of the past, or whether you want to get back on track with that in 2024. But real quick, I wanted to show you that Hershey's looking quite attractive here with this 20% sell-off this year. They're back in the blue zone of the dividend stair-step chart, with an oversold weekly cluster to boot at the moment. So that one looks very interesting to me, as does Johnson & Johnson, right? Johnson & Johnson, obviously a high-quality, AAA rated company that is kind of hanging out right on the blue zone right here at the moment. So yes, there were some areas that were out of favor this year, but I think if you're picking and choosing amongst the rubble, there's some opportunities out there with some higher quality businesses. It's not just the junky companies that got beat up this year. All right, let's go ahead and get back on track with our grid now here real quick. S&P 500, by the way, was up 1% today after being down more than 1% yesterday, thus ending that 37-day streak with no 1% down moves. That would have dated back here to late October. So a heck of a run there. And even after yesterday's sell-off, we remained with the strongly bullish posture. In fact, yesterday was one of those bullish intermediate confirmation signals. So for those of you who would have been brave, maybe you would have been buying the market at the close yesterday and benefited from the move higher here today based upon that signal. So the S&P 500 up 1.03%. Dow Jones was up 0.87%. NASDAQ Composite up 1.26%. And then once again, Russell 2000, the leader today, up 1.73%. Remember that Russell has been going up at a breakneck pace here recently. We spent quite a bit of time yesterday in my factor-based swing trading class discussing that topic and looking for opportunities within the small caps there. All four of these charts, of course, remain with a strongly bullish intermediate posture. All four of them remain above their rising 30-day moving averages. Therefore, we are seeing more bullishness than bearishness in what has been quite an extraordinary year. All right, my 15 minutes is up. I want to thank you for stopping by, checking out the video. I also want to wish you all a very Merry Christmas, Happy Hanukkah, Happy Kwanzaa, Happy Festivus for the rest of us, as Seinfeld would say. And I hope you all have a wonderful New Year and New Year's Eve as well. Stay safe out there. You'll next hear from me when we get back on track. I believe it's January 2nd is a Tuesday, so I'll be in my Tuesday morning dividend growth investing class for my premium students, and then you guys will hear me in the free video that night. And again, if you want me to do an hour-long video that night to kind of start the year off right, click like on the tweet for this video here this time around. It will be pinned to the top of my timeline. If we're up and over 100 likes, I'll be happy to give you an hour of my time. On the other hand, if you enjoy these shorter 15-minute videos instead, then no need to click like. So I'll let you guys decide collectively, but whatever you do, again, want to thank you for checking out the video. Wish you all the best of success with your remaining days in 2023, and looking forward to seeing you all in 2024. Take care, everybody. Bye-bye.